All right. Good morning, ladies and gentlemen. Today is September 2nd, 2020, and I'm back with another Wednesday live show. And if I'm not mistaken, this coming Monday is Labor Day. Let me look at my calendar. Yep. So we got a 3-day weekend coming up, and typically Labor Day marks the end of summer, which is going to be kind of nice because even though the market had a huge rally over the summer, it seems like it's been kind of dull day to day, right? And I suppose it depends on what you consider dull, but I mean the market has obviously just been drifting higher and higher and higher, and but there's a lot of very narrow range days that make things kind of dull, and it's also kind of dull when all it does is just sort of drift higher, drift higher. Here's what's interesting about where we are right now is so this is what I consider to be the primary uptrend line, right? And look at how extended. Look how extended the S&P is from this. And this is for whatever reason this is not accurate right here. That's why the SPY is always on these particular charts, it's always a little bit more accurate as in the morning as far as like what the intraday looks like. But anyway, my point here is that it's a long way down. If the market just pulled back to this primary trend line, which would be not that big of a deal because it's typically you see markets that they go up, they go down, they cycle up and down, but this current sort of rally that's going on here is it's pretty outrageous, really. I mean, it just seems crazy. If you look at so look at how there was hardly any down days over since the beginning of August. You see like what 4 days here. Actually, if you go to the S&P, you got 4 days since the beginning of August that the market is closed lower than the open. So anyway, long story short, this is what I wanted to peek at real quick before I get into the stocks is this. So, and I think I heard Bob Pisani mention this on CNBC this morning, but look at the RSI on the S&P up here at like 80, right? And so typically, a 70 RSI. Of course, the market's been crazy, lately, but over the past couple of years, but typically a 70 RSI back in the old days in the old technical analysis textbooks that I would read, you start pushing a 70 RSI, then things are getting overbought, right? So, seems like, in the in the current market environment, 80 is more overbought. And you can see, where some of these previous peaks were or whatever. And here's what's interesting. Look at the initial sell-off, like the initial sell-off back in February. It took the RSI down to 20 in literally like no time, right? No time, just a few days. Of course, those were huge drops at the time, but took the RSI down to 20, and then you get this little bounce, and then down here at the bottom, obviously you had a negative divergence on the RSI, but I'm kind of amazed at how it was able to go all the way down to 20 on just that first little 5-6 day dip there. But anyway, looking at the bigger picture here, RSI is like extremely stretched. It's the highest it's been since as far back as this. Well, yeah, this chart goes back 2 years, and so there you go. So anyway, just looking at the S&P 500, I should pull up the RSI on the Qs, but all I'm saying is that if if we were to get a sell down to this trend line, it'd feel like a bear market to some people just because everyone's so kind of conditioned for the market going up each day. Here's the other thing too is these trend lines, you draw these trend lines, they keep getting steeper and steeper. And so it wouldn't really be a bad thing for the market to pull back, right? Seeing so this morning, like some of these really super, what am I trying to do here? Super high powered stocks had big gap ups, and kind of fading down. I've seen a few of these out there. Some of these, but I mean, some of these like breakaway moves on some of these tech stocks are just amazing. I see Apple down a couple of bucks, so Apple split, but yeah, I mean, typical price action when you get a sort of a parabolic run up and then a gap up, that you're going to see this type of price action. So now that Apple has split, it's not going to affect the Dow nearly as much. I wanted to look at the Qs real quick, and I wanted to look at yeah, so I almost expected it to be higher, but so yeah, basically 80. RSI on the Qs up to 80. It got up to 80, it looks like, back here, and then continued a bit higher. So that's kind of interesting. There was a negative divergence right there on the Qs at the high back in February. So anyway, same with the Qs. A pullback just to this primary trend line here would feel like a major sell-off. So, and I suppose if anything, that's positive, because that's a positive thing, because even if there is even if there was a pullback of some magnitude, but the fact that everything is so extended, right, seems like it'd be a pretty decent time to be a little bit cautious. But anyway, it is what it is. And so, cool thing about the system, like I always say, is that the system itself, doesn't care about what the market's doing. It's only interested in individual stock setups. By the way, we have a new stock triggering in today. Ciena. Let's see what this thing looks like. Yeah, pretty decent little pattern. Stock's in a primary uptrend. Had a nice little sort of pullback there, sort of resumed the uptrend. This is that gap up this morning. I would say this would be a case where you're probably better off maybe holding off and trying to get it. Well, I mean, here's the thing: it's only 50 cents away from the trigger right now, and so that's not so bad. This, quite frankly, this stock does not have a real high ATR, but this is kind of a weird one too, because the initial stop is starting out at the bottom of the pattern, where typically, I won't say typically, but a lot of them start off, just a little bit lower. But anyway, big scheme of things, like if you zoom this chart out here, this is sort of typical pattern where you get a pullback, and then in theory, it's going to chop around here, hold this low is going to remain intact, and it's going to continue the uptrend. So I kind of don't like the way the rounding top look of this, but we've had other ones that have had that sort of top, and then they go on and just and do what they're supposed to do. So I'm not gonna worry too much about that. Quite frankly, I mean, it's not the best looking setup to me, and so you may or may not want to pass on that one. So, and of course, the system is just using calculations, and so it doesn't, it can't distinguish between what looks like a really good pattern and what doesn't. And in the past, a lot of times, the patterns didn't look that good to start with, and they worked out real well. So let me go through the open trades real quick, and then I want to talk about the pending trades. Here's Honeywell. A lot going on here. So let me zoom in. But Honeywell, the oldest open trade that we have here, and working out pretty good. What's interesting about this is, well, there's a few things that are interesting, but what's interesting here is that the trailing stop, like after this gap up, what it got added to the Dow, right? It's actually a pretty nice looking pattern. So triggered way back here and gapped up a little bit. It's kind of, sort of been all over the map, but then again, it is kind of has a habit of pulling back and then making a move higher and then pulling back. And then of course, this is when it got added to the Dow, and that trailing stop just basically went up under this initial low here. And so that's kind of actually interesting because a lot of times when a stock gaps up like this, if you use the low of the gap up, many times, the next day or over the next couple of days, it'll pull back and close that gap. But occasionally, like it did back over here, right? Gapped up and then, worked its way back down to close the gap before going higher. But occasionally you'll get a stock that gaps up and never looks back, right? So added to the Dow, which obviously, we didn't know ahead of time. The system didn't know, so looking pretty good here, especially for, big cap, big name stock, but it is what it is. And so I'm starting with the oldest ones. This is the second longest open trade that we have here. And as of last night's close, this thing was up like 31% from the trigger price here. So anyway, look at that. It's got the same sort of pattern we're seeing on some other stocks this morning where they ran up and then gapped up and then started fading back down. Excuse me. This is, and if I had to guess, this stock is probably due for a pullback, right? That stop is trailing up pretty darn tight too, and you can see the target way, way back down here. As I've mentioned before, like on last week's show and just about every show, stock like this is why it's a good reason to, take some profits at the target and then let it run with the trailing stop, because occasionally one out of every, so many swing trades, you're going to get an additional, this stock will just never look back and keep going and keep going. And you can, we did a long time ago, and I'm not sure if I have this on the videos page or not. I need to go in and probably update that videos page, but we had a video where Jeffrey did his little price volume crescendo lesson, and that's probably what you're getting right here today. Like this morning's gap up would have probably wouldn't be a bad idea. Really see anything about I don't really see any extreme volume down here, but I get the volume all squished down. Anyway, price volume crescendo, big gap up after a run up. Sometimes you just want to lock it in up there. So, I mean, obviously you have that discretion, but this could, this could go into another pullback like it did here, and who knows? I mean, you could it could still not tag the stop and continue higher. We've seen a lot of that lately. Market's kind of exceeded a lot of expectations as far as what it can do, and it's almost to the point of being ridiculous, but it is what it is. So moving on, we have Nike, which had this beautiful sort of pennant breakout pattern, right? Like a big pennant pattern. And then interestingly enough, when it broke out of this, you've also got like another sort of little series of these flag or pennant type breaks right there. You got one right there, and then you got, it's kind of a flat top break here. But yeah, this thing, Nike of all, another Dow stock. A lot of times, these. I mean, this is not a tech stock, right? So, but you see, I'm trying to look to see where on the chart Nike's had. Looks like towards the end of last year, Nike had a similar sort of, I won't say parabolic run up, kind of like it is now, but obviously, And that could have had something to do with earnings too, right? I'm not sure where earnings were on this, but obviously at the beginning of August, there's this one big long range day up here that occurred, a couple days after it triggered in, like right after it triggered in, there was this long range day. And I'm not sure what the news on that was, but that sort of started off this whole pattern. Long range day, little consolidation, another long range day, consolidation, and boy, this thing is just has obviously, attracted a lot of additional institutional money. So maybe it's a value stock. I don't know. Anyway, so far so good. So Nike, yeah, it looks like it's due for a little pause here, but yesterday was another one of those long range days. Let me clean this chart up a little bit. One of the things is that when I mark all this stuff on the chart, it kind of skews the chart a little bit as far as what you're seeing, as opposed to just a nice clean chart with no marks on it or whatever. So, but it is what it is. I like to show how the moving averages ratchet up here and ratchet up, and so this is another case where the moving average, and this was probably a close call over here. It's hard to see, but at one point the trailing stop, like right here, the trailing stop was basically, kind of like right at the same price the target was, right? So it's kind of hard to see here. And then I guess this little three bar day here, the low, then the next time the trailing stop ratcheted up, it was probably ratcheted up like the following day there, and is able to stick with it. And it's kind of and so the trailing stop is designed to keep you in for the big move that may occur, while at the same time protecting protecting like the recent lows and or profits. And the trailing stop is dynamic too. It will accelerate as a stock moves up. It will sort of accelerate to the upside, right? So let's see, on that Palomar, you kind of, well, it's hard to tell on this, but I would expect it to like depending on what happens with this today, I would expect it to probably tighten up at least under yesterday's low. So all right, so moving on from the oldest ones, we got Nike. And then this Ballard Power, man, this thing is volatile. So this thing hit, this thing is tagged the trailing stop today, which was basically right at the trigger price. So this is an interesting one because trigger price was 1540. It opened the following day at 1599. So just call it 16. Right. So the idea is that if a lot of people get hung up on like thinking that they're supposed to buy at the exact trigger price, but as you know, if you've gone over the documentation of videos, that that really, just like pulling the trigger the next morning at the open is fine. Buying a half position at the open is fine, and setting a limit order for the exact trigger price. And so there's a few ways to do it, but what my point here is that so the trigger's 1540. You get up the next morning, it opens at $16, and you're like, I'll go for it, right? All you got to do is adjust your target to compensate for the gap up. And so, well, basically what happened here is you paid 16 for it. So instead of, this is like the system target here, right? $17 system target. Add the 60 cents to it. And this is a great example of why it's not a bad idea to set, well, why it's a good idea to set a limit order too, right? So in theory, this is closed. This is going to be closed tonight, but in theory, this worked out pretty well. So basically, if you bought it at 16, set a limit order to sell half of it at the target. You got a decent little profit, and then you were going to let the other half run, right? Which didn't really happen, and the trailing stop came up and basically took you out at break even on the other half. So, um, so you made a decent profit on half the position, and now you're out. And of course, sort of based on based on what I'm seeing here, there's no guarantees, but based on this, and it wouldn't surprise me if today was like just another shakeout, like this day was. Certain stocks have certain like weird characteristics, um, and there's a lot of there's a lot of patterns that you can see with your eyes, and they don't always repeat. But I've always been big on symmetrical patterns and patterns that repeat. And so anyway, long story short, like today's trading looks very similar to this sort of shakeout day. Just so happens that enough time went by and it hit the target that stop moved up to just under this last little pivot low. And so it is what it is. But so this will be closed today for. Oh, and here's something else. This is when you go and look at the closed trades, this is going to look like, basically like a trade that didn't work, right? Because it's going to show that, it's going to show like the minimum percent is basically going to look like a 10 cent, like a 10 cent gain or whatever. It might show 0 or 0.1% or something, but it did hit the target. So anyway, keep that in mind. Moving on, MSCI. I'm going to kind of jam through this real quick. So this is extremely expensive stock, but this is kind of was a decent looking pattern. Now here's the funny thing is that you could have looked at this. You could have looked at this pattern back here, right? Like they take that trend line off. So back over here, it looks like the stock's in a downtrend, and when it was on the pending list, so it may have started on the pending. It may have started on the pending list, like here, right, with the trigger up here. And this is something I want to talk about because I had somebody um, ask and mention about the pending stock. So I do want to get into that in a little bit, but I'm going to try and get through this real quick. Anyway, what I'm trying to say here is that at this point in time, this stock looked like it was a topping pattern. It looked kind of crappy right here. And, funny thing is, I was just talking about symmetrical patterns. This sort of top looked kind of similar to like this area here. But anyway, so what I'm getting at here is the stock was like, sort of in a pullback, kind of toppy looking and that, and it didn't look all that great. And so it would have been sitting on the pending list, and the trigger would have been like kind of way above the trigger would have been significantly above like the current price here. At this point here, the trigger price would have been above those highs. And so anyway, what I'm trying to get at is, and so even here, you did get a trend line break. There was a pivot low and a trend line break, and that was a relatively shallow pullback there. Stock didn't look all that great, but at the same time, that's kind of what the system is. The system is designed to. It's designed to trigger into stocks that are in near-term primary uptrends that have a pullback, and then the trend resumes. And so this is actually kind of a textbook. It's kind of a textbook, trend line break, pivot low, break, a little consolidation, move higher. And so it's looking pretty good here and approaching the target, right? This is a case where it would have triggered in like basically right at the trigger price. And so obviously, stocks gap up, they gap down. We have no control over, where a stock's going to open the following day after it triggers in. And so that's why we have the three different ways, which I discussed at length last week, of like, deciding when to get in. And of course, there's a fourth one, which I'll mention here in a minute. But so far, so good on MSCI, and a stock like this starts heading this direction, and there's a pretty good chance that it's going to tag that target relatively soon, hopefully within the next couple of days. So I like to at least see him hit the target. Right. So, but I mean, here's the thing. So this trailing stop is almost up to break even here. It's almost up to the trigger price, and so a little bit more forward progress. I would expect this to move up, and so once the trailing stops at break even, then there's that's basically where you want it to be. Akamai. Akamai, tech stock that gapped up this morning is folding over. This thing's had a pretty good run here too. Same sort of thing that I was just talking about. At the time that this sort of triggered in, it kind of looked like it was topping out, right? I mean, it had this big, well, this is a whole previous trade, right? That was a previous trade, but back over here kind of looked, toppy or whatever, and then, this did turn out to be a pivot low, but it started rallying back up. And it had all this overhead resistance from back over here, but look at it. It started, it turned the corner, started rallying, and here was the close above the trigger this particular day, 820. Next day it opened 85 cents higher, and so this is excuse me. I drew the original system target, and then I drew the target that you would have had to compensate for the gap up. And you can see that, like I said last week, when these trades work, they typically even if they gap up to open the trade, if they work, and when they do, they typically allow enough of a move to compensate for that gap. If you just make your target compensate for the gap. So far so good on Akamai. Right now, of course, big run up like that, it could be going into a pullback mode here. So I'm a little bit surprised, but of course, the system calculates everything. A little surprised that this trailing stop is still hanging back here, but I would expect it to move up, probably to break even, to where the target is. I won't say break even. I would expect this trailing stop to move up fairly significantly after the close today. Notice how the initial stop on this particular one was not down here at the bottom of the pattern, right? And it's just, I mean, it just varies, right? It seems like it varies, and that could be everything's a function of price and time. So that could be because the pivot low that happened back here, 4 or 5 days went by before it triggered in. And so, as opposed to some that come down and trigger in closer to the turn. But anyway, Akamai, it was up 8% at yesterday's close. So it's up, roughly 7-8% now. Looking pretty good. There's no overhead resistance, right? And so the trend is up, and you get these uptrends, and in there you get up and down chop. Everything's a little kind of weird because of just the way the market's acted since the March lows and the sell off, but it is what it is. So next up we have FSLY, which is an extremely volatile stock. This is the one I was talking about. I mean, on a day-to-day basis, I mean, the percentages in this thing are just extraordinary. The percentage moves. I think, I was saying, well, today it's down, 4% or whatever, but yesterday it was, I don't know, one of these days, I mean, it was up almost huge percent. So just on a day-to-day basis, it fluctuates a lot. Anyway, it is what it is. This is the one that back here when I did the show this day, I was going over the pending stocks, and I said on the show, I was like, we don't honestly recommend that you jump in any of these intraday, right? I mean, theoretically, you could be looking at the pending list, and what the what the trigger price is, but the actual trigger obviously is a close over the trigger price. Like that's where they actually become open trades. But I said that this one was probably a good exception to the rule because of the volatility, that it was very likely that it was just going to rip through that trigger like it did. And the very next day, that's exactly what happened. So, um, very rare cases. I mean, if it's a high powered tech stock or whatever with this kind of volatility and these kind of moves here. So, this sort of bottoming pattern was manifesting in a similar pattern to this one. And so, anyway, long story short, I suggested that this one out of, any of them had the potential to, might want to get in intraday. And, here's another case where, and obviously the next day it gapped up. It gapped up fairly significantly at the open, right? Because of the long range day that triggered it in. So, the whole idea of half a position on the gap up, setting a limit order for the other half, you would have gotten filled. So you would have had a full position here, like probably, probably around 86 or something. But I mean, the volatility on this thing, right? This high the other day here was almost $100. And so any way you slice it, looking pretty good. Today could be like sort of one of those shakeout days. Oh, look, the market turned around. It's ripping higher now. It acted like it was going to it acted like it was going to sell off early. I've been noticing that on an intraday basis, like the market rallies over in the overnight futures, it rallies, and then the market opens and it pretends like it wants to sell off, and then at some point, it sells off or whatever, and this and that, and then it turns around and rips the new highs, and that's like almost a daily. It's almost like it's programmed to do that. So, I think things are going to get exciting after Labor Day, right? And sometimes it takes a week or two, but that's when you start to get some volatility in the market. But anyway, so this has got, a pretty standard little pattern here and still looking pretty good. And the trailing stop as of yesterday is above it's above the actual trigger price. It's probably close to trailing stop's close to break even if you use the two entry strategy. If you just jumped in at the open the following day, then it's got a little ways to go, but looking so far so good. So moving on here. Let's move on here. This one's looking a little bit rough. And the thing about this is that this RTRX is, I mean, there's a reasonable pullback and a breakout, but there's a lot of choppiness going on. This is kind of an odd, this little 2-3 day move here. This is likely what sort of put it on the list, right? Like normally it probably, if it wasn't for that sort of pattern there, it probably wouldn't have made it to the list. But it is what it is, and so sometimes you see like big move like that for whatever reason, and then you get a decent sort of pullback pattern afterwards, and then a reversal. So anyway, what's interesting about this one, I mean, it's a decent looking channel breakout, but it hasn't gone anywhere, right? It hasn't gone anywhere since it broke out of that, and this initial stop is basically has not moved, which is kind of interesting. The initial stop, and I have T stop on here, but it should say initial stop, has just stayed the same since it triggered in. And so today could actually, today's low and the way that this pattern is working, this could have been like sort of the retest of these lows. And if not, it'll get taken out. But so nothing too exciting there. And this thing's only been open for 1, 2, 3, 4. Today's day 5. So, and closed a little bit above the trigger. And then the following morning it opened at 1957. So basically, this one's opened right at the trigger price there. And yeah, it was looking okay up until yesterday, but it is what it is. So I think this might be a biotech stock. So, and speaking of which, this one turned out to be kind of a disaster. It's very rare. I won't say very rare, but it's rare that we get triggered in and then just take a full stop out. But of all the stocks to do it, it would have had to been this one. So the funny thing is this is one where back we talked about how when this thing was pending. I remember back over here we were sort of following it down, and I gave like a really good explanation of why we used the closing price to trigger in because of like this day. There was like some big news on this day, and this is like one of those story stocks. A couple of weeks ago, like I think it actually was this day on 8/12, the news this morning that caused it to gap up like that was that these guys we're making 100 million doses of COVID vaccine, and I mean it's basically like a done deal or whatever. But this pullback it's still happening, unfortunately. um this day, like right here where it triggered in, um it didn't make the turn. All right. I mean, everything was lined up, but everything was lined up for you got trend line break, you had the pivot low, you had that big up day there. But it doesn't always, they just don't always work out. So it's pretty rare to take a full stop, but it is what it is. It happens. Stocks like this, there's always a chance that you get in and then you get a massive move, massive upside move. But just occasionally, it is what it is, but not a big deal. Speaking of which, okay, so this is the type of thing that makes up for it, right? This one triggered in. I mean, this one literally, this is the 4th day that it's an open trade here. So this one triggered in right here on that was on Friday, right? So on Thursday, the trigger was 2710, which is over here, and then on Thursday it closed above the trigger price. Next morning opened here, and looking pretty good too, right? It looked pretty good. It had the typical characteristics of what we like to see, and that is, let's see here. All this is kind of, well, I don't know. I mean, all this is kind of like not relevant. I suppose what's relevant is this move, right? And it was a monster move. Look at these gap ups, right? So something was going on here, like super heavy buying pressure. And then it went into a nice orderly pullback, and then sort of turned the corner, broke this trend line, and I don't remember exactly when it hit the pending list. I don't pay much attention to that, but anyway, big move today, right? So I mean, it triggered in and kind of started heading in the right direction, and then boom, big up day there, and so this kind of makes up for this one would make up for the one that kind of did the same thing but just petered out, right? Like the one we just looked at, the mRNA, breaks the trend line, goes up a little bit, looks like it's going to turn the corner, and then just rolls back over. So actually that one looked more like sort of an anomaly, but it is what it is. So anyway, over a long series of trades, it all sort of pans out. This is a beauty though. So as of yesterday, the thing was like up a couple of percent, and and then depending on what it does today, you tack another 3-4% onto it. But what's kind of cool about this is that, I mean, obviously something's going on, right? And so you look back over here, a lot of times when you get these when you had long range days back over here to the upside, you got some pretty decent follow through. So um, it is what it is. And so far, so good. At this point, if I zoom back, like I have no idea what these guys do. So it's kind of a weird chart. I mean, it's sort of all over the map. Look at the 2019 move though. That was pretty out. I mean, the thing doubled in 2019. So anyway, it's kind of a decent little pattern right here, and I would expect that trailing stop to come up significantly at today's close. All right, moving on. Sienna, which is triggering in today. So there you go. Anywhere in this area is probably not a bad spot. Although, like I said before, this sort of cup, the cup's already been has already sort of happened, kind of like that one or that one. So I'm not particularly excited about Sienna, to be honest with you. It tends to be kind of a boring stock. I mean, it can do nothing for a long time, but there's still a decent possibility that it can drift up like after this pullback. So anyway, let's look at the pending trades and real quick, and then I'll wrap this up because there's only a few of them here. Now here's the thing to keep in mind: there's 3 pending trades right now, right? Let's look at this first one. It's BRKS. As you guys know, or as you probably know, if you've been around for a while or years, yeah, the market used to move in what we call cycles. And so the market moves in cycles and our system kind of works in cycles. And so and eventually, I guess, when there's a down cycle, a whole bunch of stocks start to set up and hit the pending list, right? And then when you get a sustained market move higher over, weeks or months, then a lot of the stocks they trigger in from the pending list, and then that's that. And so, basically what we're seeing right now is, there's 11 open trades and there's 3 pending stocks. And so there's the part of the market cycle where you go into a pullback for a week or two. Then what happens is you get the opposite. You get a whole bunch of the open trades get closed by virtue of the price tagging the trailing stop, which is hopefully above, the trigger price. And then the pending list starts to stack up with stocks that are in pullback mode, and and then the cycle repeats. And so that's sort of the idea is, we're looking for stocks that are in uptrends that have a reasonable pullback, and then the uptrend resumes, right? And so this is, this one's a weird one because of this move and that. And so, not the this is not the prettiest one, like out of the ones that we just looked at, right? Like some of those, like to me, like Nike is probably like the best poster child for, a technical pattern, technical setup or whatever. But it is what it is, and so this particular one, and obviously the system is, it's programmed to look at numbers, prices and volume and ranges and all that stuff. And so it can't, like us humans can look at the chart and say, well, this kind of run up here is kind of weird. But anyway, this one looks like it's about to trigger in. All right. Looks like it could trigger in today. Not the prettiest pattern, but hey, you never know. This is actually a semiconductor related stock. Semiconductors have been doing pretty good. So let's go to let's go to this one. This is the best example I would say. So, and by the way, on this LRN here, we had two previous trades in this stock that both worked out great. Especially this last one. This was, if I'm not mistaken, this was one of the biggest gainers that we've had so far this year. Was this prior trade here? But anyway, forget about all that. The way that it works is that the stock's in a big uptrend, and then it has a pullback, and the more orderly the pullback, the better. And so what happens is, like maybe this one hit the pending list, like, way back over here. It's like on 817. And so what would happen is the system would say, okay, here's a high powered stock that's all of a sudden going into pullback mode. And so it hits the pending list, and it starts off with the trigger price like way above, like maybe it hit it this day, say, right? Like 819. And then you look at it and you're like, well, geez, the stock's at 42.50, and the trigger's way up here at 48 or whatever. That doesn't make sense. But the idea is that as the stock, as the stock gets identified, it hits the pending list like real early, and then over time, like over sometimes a couple of weeks or longer, the idea is that the stock is in pullback mode. The trigger sort of floats down way above the price. And then as the stock begins to, one of two things happens. It puts in a pivot low and turns the corner, right? Like that could be a potential pivot low there. Puts in a pivot low and then turns the corner and, forms the sort of a V bottom, right? Or, maybe it trades sideways for a couple of weeks here, and then it's like sort of a U bottom, or maybe it just has like a big, all of a sudden, like a reversal. Like, see, here's the thing, like back over here, this particular day, obviously it didn't trigger in, right? And so that meant that and this will change on a daily basis. The trigger will sort of float on a daily basis, and so right now it's at 38.85, right? So let me zoom that in here. 38.85 is like, yeah, right about there. So yesterday's close was, wow, it was 38.85. Huh, that's interesting. Oh, I'm sorry, the trigger's at 39.50. I was looking at the wrong thing. Pardon me. All that was yeah, so see what's happening here is like this trigger's been sort of floating down since way back here, and then we're sort of at the point here where, and you can see what it's doing today, right? Now, if it had turned the corner, like if and when it turns the corner and starts to rally back up, the idea will be that we'll catch it on the way up, right? And that's how I mean, if you look back to a lot of the stocks. So, typically this is this is just the typical pattern. Stock goes into pullback mode, and then like as of right now, this thing could roll back over, easily roll back over, break below this pivot low, and it could be headed down here. At some point down here, it would just drop off the list, right? It wouldn't even be a pending stock. So if it continues to slide down, at some point it would drop off the list. And so, I mean, it's not gonna follow it down forever. So it's either gonna turn the corner soon or not. And so if it gets down into this area, chances are it'll just be gone from the list. But what I wanted to, it's probably not a good example. So we had this trade in it here that hit the target and everything, and then finally tagged the trailing. This is a humongous trade at the time, and then it went into like just a few days pullback and triggered in again, and then made that monster move. And so this particular pullback is, I mean, it's kind of weird looking because the whole pattern's weird looking because of the move this thing made. I mean, the stock basically doubled from here to here in a short amount of time. But so anyways, that's sort of how it works, right? This is where the current trigger is, and it may or may not trigger in, and it's only going to trigger in if it's turning the corner. This thing could trade sideways for a couple of weeks here, and then and then trigger in at a different price. It could move a little bit lower and trigger in at a lower price. So we'll see what the last one looks like. Unfortunately, this is not the greatest week to do a lesson on how the pending list and triggers work, but it seems like it was about 4 or 5 weeks that I did that. Anyway, here's one where 87.75. This is not a bad. Make sure I got that right here. 87.75. Yeah, that's close enough. I mean, basically, you get a stock like this and decent uptrend, decent little pullback and consolidation, and so how stocks like to pull back from the highs, not too much, and then cut back up, right? And so that's sort of the idea here is, if you can get a close above sort of this resistance area here, then it's going to cut back up and rally back up towards these highs. And sometimes that can happen fast, right? Like this is probably not the greatest example right there, but you had a little sort of like kind of a pattern right there, a little wedge pattern or whatever, and it broke out of that. And this is looking more like, I don't see another place on the chart that had like a base like this is sort of building here. It's a little bit different. So this is more like kind of pulling back from the highs, building the base, and then if it turns back up, we'll catch it on the upside. If it breaks down from here, then if that like breaks down, then theoretically, we won't be in it. And at some point down here, it will disappear from the list if it breaks down. But a lot of times, you get these pullbacks off the highs, and then they turn back around and just cup right back up, hit a new high, go into a run. So anyway, it is what it is. This looks kind of toppy to me compared to this, but yeah, what do I know? Right? Going back to the market, there's so many points in time over the past month or so. You could have said, hey, this market's getting out of control. It's getting extended. Bad breadth and narrow leadership, and we've all heard all that. And meanwhile, I mean, just this is like, I mean, it's like the late '90s all over again against. And the funny thing is that millions of people are unemployed. The economy, although I did hear someone on CNBC this morning say that the economy is no longer in recession or whatever. So. I don't know. I don't know what to think about the whole macro environment, but I do know that this market is just purely based, objectively. Buying the S&P when the daily RSI is over 80 is you're probably better off, waiting for a pullback. And so one of the things that people seem to lack these days is patience, right? So if you're waiting for a pullback to buy, and then you get 10 days in a row where it just keeps going higher, people are like, oh, I need to chase this thing here. I'm missing out. And so the whole fear and greed and FOMO and all that stuff, and nobody can think of any reason for the market to go down now, because against the backdrop of nothing but horrible fundamentals and valuations, and that the market just keeps ripping higher. So I've seen it before. I've seen these type of environments. It does remind me a lot of the late '90s. So you got a lot of retail participation here, and a lot of craziness and stocks like Tesla. But anyway, all that aside, that's for another day. I've been saying for you can go back and find a video from back here in July or August or whatever. basically, I've been saying as long as that particular trend line is intact, the market's still in an uptrend, and that's just looking at it objectively. And so now we can draw a little bit of a trend line with a little bit more of an angle. And so, market pulls back and breaks that trend line. Maybe it pulls back to this trend line. So as long as that primary trend line is intact, then the market's in an uptrend, even though, it's getting, you see how it got really extended back over here. And then, like one of these days may be in store, but who knows? We've got seasonal stuff going on here. September is seasonally speaking, if you have a copy of the Stock Traders Almanac or whatever, September is historically the weakest month of the year for the stock market. So not October like a lot of people think, but September. And so a lot of complacency, a lot of, buying short. I don't even know if there's any shorts left. People, I think, a lot of what we're seeing in individual stocks is people attempting to short and just having to cover. And so, it is what it is. And one of these days something will come along and create a little pullback of some sort. I mean, there hasn't been like a pullback, I should say dip, a 3% dip since, I don't know where. I don't know if this was even 3% or not. So that could have been back since June. Might have been the last time we were at 3% off the highs. So anyway, it is what it is. And that's why the pending list is, with the market, like in this sort of, with this type of inertia here and no pullbacks, that's why the pending list is slim pickings, because it's looking for stocks that are in the midst of a nice orderly pullback. So we'll see what happens. Each night the system looks for new potential pending trades. So the market is not necessarily reflective of the average stock, and so there will be some pullbacks, and that's that. So look at that candle on Apple today. Wow. All right, guys. Well, hey, thanks for tuning in. I'll see you back here next week, same time. Enjoy the long holiday weekend.